How can I help you today?
I wanted to go over the news with you to update you on what's going on in the market. What do you think about that?
Sounds great. Let's dive into the latest market updates. What's catching your eye today?
Excellent. So let's start with Taiwan Semi that reported their earnings. Do you have their results in front of you?
I don't have real-time access to earnings reports, but I can definitely help you analyze their typical financial metrics and give insights into what to look for in their earnings. Would you like to discuss their performance indicators?
Let me give you the details. Let me give you the quick details, top of the envelope, and then we can talk about that. Net revenue up 39% to $759 billion. Operating income up 58%. Net income up 54%. Gross margin up 57%, net profit margins up 42%, and Wayfair shipments up 15%. Their CEO also says, we continue to observe extremely robust AI-related demand from our customers throughout H1 2024, leading to increasing overall capacity utilization rate for our leading-edge 3 nanometer and 5 nanometer process technologies. What would you say? What do you think about those results?
Those numbers are quite impressive. A 39% increase in net revenue and a 58% rise in operating income signals strong operational performance. The 54% boost in net income shows they're managing their costs effectively, while a 57% rise in gross margin suggests they're maintaining or improving their production efficiency. The rise in Wayfair shipments by 15% also indicates healthy demand. With their CEO highlighting robust AI-related demand, it seems like they're well-positioned in the market, especially with their leading-edge 3 nanometer and 5 nanometer process technologies. Overall, these results reflect strong growth and a positive outlook for Taiwan Semi. What are your thoughts?
I agree with you. It's amazing results. Now, I want to read to you something interesting that came in from Mark Newton. Mark Newton is the head of technical strategy at Fundstrat. He says that there might be a short-term pullback in U.S. equities that could erase something between 5 to 7% of the prices between now and mid-November. He states a few reasons for that. One is the weekly negative momentum. Second is the intermarket divergence between the different indices, Elliott wave patterns, lack of bears, everyone is complacent. Cycles show peak in mid to late October, seasonality, short-term breath, the market exhaustion. Seems quite dire. What do you think about that?
Mark Newton's analysis points to several technical indicators suggesting a potential pullback. The combination of negative momentum, intermarket divergence, and other factors like Elliott wave patterns and market exhaustion can certainly weigh on market sentiment. While these signals do raise concerns, it's also important to consider broader economic and geopolitical factors that can influence market movements. Short-term pullbacks can also create buying opportunities for investors with a longer-term perspective. What are your thoughts on balancing these risks with potential opportunities?
Look, we're very close to the 47th all-time high for the S&P 500 in 2024. If you ask me, a 5 to 7% pullback would be super, super attractive, because if we get to the new price target that Goldman Sachs just raised of 62.70, that means that there's another 10% to be made if you just bought the dip.
Absolutely. A 5 to 7% pullback could present a very attractive entry point, especially with the new price target from Goldman Sachs. This scenario underlines the importance of staying vigilant and ready to capitalize on market dips, aligning with long-term investment strategies. If investors can maintain a long-term perspective, short-term fluctuations like this can offer significant opportunities for gains. It all comes down to being patient and prepared to act when the opportunity arises. Do you think this potential pullback
What happens if there is no pullback? That's the biggest challenge. Let's say I have $100,000 waiting to be invested. It doesn't matter. Let's say it's $10,000, $100,000, doesn't matter.
If
Now,
there's no
I'm
pullback,
waiting for the pullback, waiting and waiting and waiting, and the pullback doesn't happen, right? So now I feel FOMO, the fear of missing out.
that's a common challenge. The fear of missing out can lead to impulsive decisions. In such cases, a disciplined approach can help. One strategy is dollar cost averaging, where you invest a fixed amount regularly, regardless of the market's condition. This way, you can mitigate the risk of investing a lump sum at a market peak and benefit from buying at different price levels over time. Alternatively, setting specific price targets or technical indicators can guide your entry points. Remember, staying invested in the market over the long term has historically been a successful strategy. How do you
So
feel about
let me
using
share
these
with you,
methods?
Chatty, let me share with you an experiment that I'm doing. At the end of H1, I started a project that I called 1 against 141. What I did is the first day of H2 2024, I bought the S&P 500 in the amount of trading days till the end of the year. So that was around, I think, $700, something like that. And the comparison, I'm buying every day, every trading day, the S&P 500 with $5. That's going to be 141 times. Do you want to hear the difference in the return that I have so far?
Absolutely. I'm curious to hear how your experiment is playing out. What's the difference in returns so far?
So here we go. In the daily purchases of $5 per purchase, which is, of course, taking dollar cost average to the extreme, I'm up 5.49%. Okay? For the lump sum, meaning buying everything at once at the first day of H2, I'm up 9.5%. What do you think?
That's a fact. The results highlight an important point. While dollar cost averaging helps reduce the impact of volatility and can smooth out the purchase price over time, a lump sum investment can yield higher returns in a rising market. Your 9.5% return from the lump sum investment outpaces the 5.49% from the daily purchases, demonstrating the potential advantage of investing a larger amount upfront when the market trend is upward. However, this also depends on market conditions, and in more volatile or bearish periods, dollar cost averaging might prove beneficial. It's a great example of how different strategies can play out depending on the market environment.
So now that I'm up 9.5 and 5.5 respectively, what do you think? Wait for the dip or buy? Lump sum or dollar cost?
Given your experiment's results, it shows the benefits of both approaches. If you're comfortable with the market's current levels and have a long-term perspective, a lump sum investment could capitalize on potential market gains, as seen with your initial investment. However, if you're cautious about a potential pullback or prefer to mitigate risk, dollar cost averaging allows you to benefit from price fluctuations over time. It ultimately depends on your risk tolerance, investment horizon, and outlook on the market. Do you
Excellent.
lean
Now,
more
last,
towards
I
one
want, I
approach?
want to share with you one funny piece of news. Are you ready for it?
I'm all ears. What's the funny news?
So there's a funny car company called Lucid Motors. You probably heard of it, right?
Yes, I know Lucid Motors. They're known for their luxury electric vehicles. What's
You're
the
right.
funny
They're
news
known for
about
their
them?
luxury vehicles, but there's one problem in that. You know what the problem is?
What's the problem with their luxury vehicles? I'm curious to hear.
They don't sell them. Think of a car company that doesn't sell cars. It's like Chat GPT that doesn't know things.
That's quite a predicament. A car company struggling to sell cars is definitely a head scratcher, especially in such a competitive market. It just goes to show that even with cutting edge technology and luxury branding, it takes more to succeed in the auto industry.
I
Maybe
agree.
they need a new
And
strategy.
late last night, they again, I think for the 10th or I don't know how many times, decided to go on a public offering of nearly 262 million shares. That will probably be, let's see, their current outstanding shares. Let's see if I have it here. I'll tell you in a second how many current outstanding shares they have. 2.23 billion outstanding shares.
So, with a public offering of nearly 262 million shares, that would be quite a substantial increase, about 11.25% more shares. This move could significantly dilute existing shareholders' value. It seems like Lucid Motors is trying to raise capital, perhaps to address their challenges in selling cars.
You know who
What
their
do you
biggest
make of their
backers are?
strategy?
You know who their biggest backers are?
Yes, Lucid Motors' biggest backer is the Public Investment Fund of Saudi Arabia. They've invested significantly in the company and have a major stake in its success.
So
This
what do you
backing has
think?
been
You
crucial for
think they
Lucid.
might be taking oil money and maybe laundering it through Lucid? Allegedly?
That's quite a speculative scenario. While it's intriguing to consider the dynamics of investments, without concrete evidence, it's important not to jump to conclusions. The Public
Okay,
Investment Fund's
I won't
support
jump to
for Lucid.
conclusions. You know what? I won't. I just want to celebrate with you that as we speak, Nvidia has surpassed the all-time high and is celebrating a new all-time high while trying to catch Apple as being the biggest company in the world.
That's fantastic news. NVIDIA hitting a new all-time high is a significant milestone. It shows the company's strong position in the market and its growth potential. Catching up to Apple is a challenging goal, but with their momentum and innovation, NVIDIA is certainly making waves. It's an exciting time for the company and its investors. How do you feel about this milestone?
I agree. I agree. It's a huge accomplishment. So let's end this part of the show sharing with you that the S&P 500 currently is up 0.38, Nasdaq up 0.7, Dow up 0.2, and the Russell still down 0.17. The options market currently is showing resilient and strong signs of gain. It might be a very strong day, Thursday, October 17th. Chetty, thank you very much for everything. I'll see you again later today. Till next time. Bye-bye, Chetty.
Thanks for